Hey, hi everyone. Welcome to another video in our hedge fund series. So today we'll go through AQR Capital. It's a quant hedge fund. The major milestones of this particular fund and successful trades the fund has made, the challenges the fund has faced, and the trading strategies that the fund uses. Okay, and the history of the firm we'll go through. So AQR Capital Management is founded in 1998 by Cliff Asness and David Kaviller, John Liu, and Robert Crail, all PhDs from the University of Chicago. It's headquartered in Greenwich, Connecticut, with global offices in Boston, Chicago, Bangalore, Hong Kong, and London. Assets under management are approximately $99 billion as of Q4 2023, and previously peaked to 220 billion in 2017. Their investment philosophy and strategy is quant driven. So it's a quant driven academic foundation fund, basically, which blends economic theory with systemic repeatable models. And it focuses on style or factor investing. So style or factor, what is it? Style is basically value investing is a style, momentum investing is a style, carry defensive is a style. So it focuses on these style investing or factor investing, and it combines all these value investing, momentum investing, carry, defensive, all these styles together for diversification. Alternative strategies, it pioneered early development of risk parity and managed futures strategies. Okay. It also does offer arbitrage strategies. So other than risk parity and managed futures and style investing, it does offer arbitrage strategies like convertible arbitrage, merger arbitrage, event driven arbitrage, market neutral equity, and ESG linked products. It emphasizes multi strategy diversification rather than highly conviction single bets. The milestones and performances, this in 2000, this AQR Capital launched first long international equity strategy, and it's a long international equity strategy. So basically, they'll go long on certain international equity stocks. The assets under management reached 12 billion by 2004 in this particular international equity strategy. In 2009, they entered the liquid alternatives like mutual funds, and became a Morningstar category leader by 2015. By 2017, their assets under management peaked to 220 billion, driven by factor investing boom. 2018-20 was a quant winter for them, so they had heavy losses in value as well as momentum factors. Their assets under management dropped by over 50%, but they again rebounded in 2023. Apex strategy was up 16%, and diversifying strategies fund was plus 12.3% annualized since 2020 launch. Q1 2025, several AQR funds posted 9 to 10 returns, including Delphi and managed futures. Some of the awards the firm has won, like Institutional Investor, Quantitative Hedge Fund Manager of the Year in 2023. So, core strategies are style, premium, and factor investing. So, they basically do this style investing, which is different styles they'll use and diversification of styles they'll use, like value, momentum, carry, defensive, and low volatility, and risk parity as well as managed futures. So all these styles and strategies are used by the fund. Risk parity, so allocations are not based on asset class, but it's based on volatility. So the traditional asset class diversification is 60% bonds and 40% into equities, or 20% into equities and 20% into gold or something, or into, yeah. So that's how the traditional portfolio allocation happens by asset class. Okay, but this is a different approach. It happens based on volatility or risk. So based on the risk, you do the allocation. So that's what risk parity is. Managed futures is trend following across global markets. So manage the futures market and do a trend following. So managed futures is a trend following strategy in the futures market, and hedge fund manager will manage the futures for a particular client across global markets. Arbitrage is convertible bond arbitrage. So we discussed this when we discussed about Kenneth Griffin and Citadel Fund. So the difference between the bond and the actual equity, you will leverage that and make money. That's a convertible bond arbitrage, merger and event driven opportunity. So whenever events happen, you try to capitalize on those events to make money. Multi strategy, so you use all these bunch of strategies like value, momentum, carry, defensive, low volatility, risk parity, manage futures, arbitrage. And this multi-strategy approach with market neutral equity is a diversified and asset neutral portfolios are developed from that. Now they have ventured into AI and ML integration also, so they're increasingly surrendering to machines using ML to for factor weighing and pattern recognition. So their fee structure is traditional. The assets under management hovered around 136 billion in recent years. Typical 220 fees in the hedge fund they do, and mutual funds their advisory fees is 1.45%. Performance fees up to 15%. That's their fees, or fixed plus incentive 2% plus 30% for sponsored funds. So factor funds example, they have global risk premium charges are 0.4% of assets under management. The challenges they encountered are again during quant winter, the fund has underperformed. So the factors underperformed like value and momentum during 2018 to 2020. Mass redemptions led to scaling back of some mutual funds. They're now shifting towards systemic AI based strategies, which reduces transparency. And it's difficult to find, what caused the drawdown also when we depend on AI based strategies. Periodically, regular issues, minor limit wallet violations and complex complaints infractions. That's there for everyone. Okay. So summary, all in all, it's a fund that was AQR Capital was founded in 1998. Founders were Cliff Asmus, David Kabiller, John Liu, and Robert Crail. And Quant Fund from Chicago, University Chicago, PhD guys. Assets under management are 99 billion as of Q4 2023. Flagship strategies are factor premia, risk parity, managed futures, and arbitrage. Recent returns are 16%, 10% in Q1 2025. Fee structure is traditional: 220 for hedge funds, zero point 0.4 to 1.5 for factor funds, and up to 15 to 30% for performance fees. Strengths are academic rigor, systemic diversification, early factor innovation. Challenges are factor crashes, redemptions, and fee pressure. So it's a bottom line is this AQR Capital is a quant rigor fund, and it has pioneered factor and alternative strategies, and uh, it merges academic research with all this quantitative rigor, and it pioneered this factor alternative strategies for institutional and retail investors. They did suffer in the 2018-20 quant drawdown, but recent performance and use of AI has brought them back. They researched, okay, and their disciplined, diversified approach continues to influence modern quantitative asset management. So that's it for today, guys. Thanks everyone for joining the call. Have a nice day. Bye.